Again, this is the ninth chapter on the Elliott Wave forecasting, and under this chapter, I'm going to take a look at the terminal impulse, and this structure has a whole chapter dedicated to it. Well, first of all, because the terminal impulse is a special impulsive form, and second of all, is because of the resembling with the ending diagonal that a terminal impulse has. Sometimes is tricky to be identified. Anyways, it should and it can be viewed as a continuation, let's say, of the ending diagonal chapter. And in a terminal impulse, for example, like in any other impulsive move, at least one wave needs to be extended. That means that out of 5 different waves, for example, that moves to the upside, 1, 2, 3, 4, 5, at least one wave needs to be extended. Terminal impulsive moves are to be found as fifth waves of an impulse of a larger degree, or C waves of a zigzag, or the C waves of a flat, or any other correction that involves a C wave. So, of course, excluding contracting triangles. Actually, they can be found on a contracting triangle or on an expanding triangle as being part of a regular triangle. Now, contrary to trending impulse pattern, it is required for the wave 4 and wave 2 to overlap in a terminal impulsive move, and that gives the terminal impulsive move a look of a wedge. Now, wedges are extremely tricky when you are involving in trading the currency market. Not only because of the general thing and the general belief of traders that wages are reversal patterns, which by the way they are not, but because let's say the main characteristic of a wedge, or the target the price should reach after a wedge is broken, should be only 50% of the measurement, or should be only 50% of the whole wedge. So after a terminal impulse normally occurs, try actions to follow must retrace the entire pattern in 50% or less of the time taken the pattern to form in the first place, but sometimes it is taken way little less time than 50%. And there is an explanation for something like this, and this is due to the fact that it has this wedge look like. Rising and falling wedges, as mentioned before, are being interpreted by market participants as being reversal patterns, which they are not. And this is why after the lower, for example in the rising wedge, or the upper trend line in the falling wedge, after the trend lines being broken, everybody will jump on the short side or long side aggressively. And this is the main thing why price action after a terminal impulsive move becomes aggressively, and price quickly retraces the whole setup, or at least 50% of it, in such a short notice. Now, terminal impulses are coming in the form of 3, 3, 3, 3, like an ending diagonal, and basically they are ending diagonals that travel within the 1 and 3 trend line and 2 to 4 trend line. If you want to go back and to refer to ending diagonals, rules and guidelines, please feel free to go to the chapter in which I treated the ending diagonals. But in this chapter we will take a look at those patterns in more details. Now, a terminal impulsive move always completes a wave of a larger degree. Keep that in mind. If it is the fifth wave of an impulsive pattern, usually the larger impulsive pattern will also be completely retraced. And this is extremely important because such a characteristic makes the terminal impulsive structure that require a lot of attention. And this is one of the reasons why I look at this terminal impulse. Why I would like to look at this terminal impulse in a more detailed structure. Now, what you're having in front of your eyes here is a New Zealand dollar US dollar monthly chart, and these are all the candles provided by the brokers, remember. So all the candles provided by the broker are on this monthly chart, and what you're having in front of your eyes is a let's say a monthly chart with each candle here representing one month. So it goes back to 1993, 1992, and of course we are in 2013. So more than 20 years ago, only in this simple chart. Now this simple chart, as you very well might notice, resembles with a rising wedge, and I would like to make an analysis on it based on this terminal impulsive characteristics. Now, in a terminal impulse, you should note that at least one wave needs to be extended. Now, normally, a classical shape of a terminal impulse looks like this. When the first wave is extended, it should look like this. The first wave, then the second wave, the third wave, let's say like this, then a fourth wave, and then a fifth wave like this, and it travels within a trend line draw from the end of the first wave till the end of the third wave, and this is being called the terminal impulse. Like mentioned earlier, in a terminal impulse at least one wave needs to be extended, and that makes the case that at least one wave needs to be bigger than 161.8% out of the next longest wave, and the next longest wave in this case should be the third wave all the time. Usually in a terminal impulse the first wave is extended, but there are cases also when the fifth wave is extended, and I will show you this on the next recording. So let's say that based on this structure, this will be the first wave out of this degree. So let's say that we have a possible wave 1 here, and the second wave, and the third wave, and the fourth wave, and the fifth wave. So 1, 2, 3, 4, 5, and keep in mind that the legs of a terminal impulse are all coming in the form of threes. So we have something like 3 here of a lower degree. So 3, 3, 3, 3, and 3. So 5 different ways out of three ways, and this is being called a terminal impulse. Let's make it bigger. Let's make it like this. So a terminal impulse, and the terminal impulse has a structure of 3, 3, 3, 3, 3, meaning each leg of the terminal impulse has three smaller waves. Now this is like mentioned before. This is a New Zealand dollar US dollar monthly chart, and I would like to take a look at this structure as it resembles with a terminal impulse. Now the difference between a terminal impulse and an ending diagonal is the fact that if the price action or the terminal impulsive move pattern is completing a fifth wave degree, then usually price action after the pattern is broken is going to retrace the whole previous impulsive pattern. So let's move on the next recording and try to analyze this structure here in front of our eyes. So stay tuned for the next recording.